Can you share with me, right? For yourself,
Yeah.
what would be your? You're looking for operators, right?
I am, yes.
So, what would be your role? How different would be your role compared to that of the operator when they take over the business?
Oh, this is like myself from a JamCap perspective.
Yeah.
So a couple of things. So one obviously for me is really, if you want to put it very more bluntly, I am actually running like a headhunter agency.
Okay.
Right, just to kind of like make some parallels against what's common now in the market. So I look for really, really good operators who's in their prime and in the also great mental state that I want to do something different.
Mm-hmm.
So that's my role, and I through the structure that we have created for operators, where we give modest salary, not from us by the way, just from directly from the cash flow of the business that's going to be acquired, as well as a sizable chunk of the equity of the business. That is kind of like the carrot for the operators, right? So that's my role. I'm just meeting operators like multiple times a day. So once they have agreed to come on board our journey, then the whole acquisition process starts. Finding for a new deal, doing diligence all the way up to close, right? So once close already, that's where JamCap steps in again on a different level this time. So we would want to create a decentralized environment for the operators so that the operators can focus on the business with us minimally interfering. Us means JamCap minimally interfering, right? So what we want to do is, eventually there are some problem statements that are common across SMEs. One is actually a lot of the SMEs have not fully digitized, right? So a lot of the records are still kept on pen and paper. Like, these are true, right? You've seen it. So how can I accelerate that, and not just for the sake of like introducing technology, but really for real returns of investments? Like, how do I actually keep the workforce, not to make it shrink, but keep it as it is, but grow on a top line perspective? Yeah. So I think those are kind of like common problem statements that JamCap can create, can play a part as a role of, hey, I maybe identify the best AI providers out there to say that, hey, I want to talk to you, and I've seen that you've done case studies, use cases for portfolio A of JamCap. I'm portfolio B. Maybe I want to do it as well, right? So that's something that we are creating on the site too. Yeah.
Great. So right now, what you see in the SME market in Singapore and Malaysia, right?
Yeah.
What is your observation around it?
Yeah. So these are really great businesses, right? So I think like full kudos to the current generation of founders. We started like 20, 30, 40 years ago, built really enduring, very profitable businesses, but just because of their age, their physical, the traits, as well as the energy left within their banks, the business become just stagnant, right? And that it doesn't make much sense for them to actually take much risk from a risk reward perspective, because just from a company life cycle, career life cycle, that it's there, right? So I think that's where we are seeing a lot of those, and that's the theme of where we are today, right? I think that's the first one. The second one is from a governance standpoint. Obviously, it's not as sophisticated as MNCs, the bigger companies, right? From a bookkeeping perspective, I think it is okay, but from Singapore, right? It's okay, but can be improved. So sometimes you really need to dig through the trenches and try to figure out whether these numbers have been represented correctly. I don't think there's much, I say this in very general terms, but I don't think there's much motivation actually to confuse or to misrepresent numbers, but just sometimes the way it's being record kept, well, it makes the due diligence very difficult. Right. Yeah. So I think that if anything can be improved, I think maybe that's that side of things.
The documentation and record keeping, right?
Yes.
Okay. So coming back to it, right? Yeah. Based on what you have experienced so far, what's the typical time taken for the due D process?
Due D process, we try to keep it between 3 months plus.
3 months plus.
3 months plus. It's quite accelerated from what I would think.
3 months plus, huh?
from really getting all the information, then re-crunching the numbers, and doing financial due diligence, legal due diligence, operations due diligence. We try to do it in parallel. We have partners to help us with that. And hopefully we can just optimize the whole process and get to the point of completion.
Yeah. Due D is normally a very tedious process, right?
It is very tedious.
And it's probably one of the most important process already.
Well, yes, you
once you reach that stage.
100%. Yeah.
So okay. So back to it right now. Do you see a big challenge for not for GenCap, right? But for anyone, right? For example, maybe another person who is in their 40s, they want to use their own personal funds to buy a business. Do you see that such individuals at their own personal capacity will face a lot of challenges finding a suitable business to buy?
It's not going to be easy. I want to say, because a couple of things. So when you use your own funds, unless you're a billionaire or so, the size, the natural size of how much you can deploy versus kind of like getting a couple of investors to help to co-fund it together with you, right? It will be limited, right? So what we're talking about, right? Like how much money can you deploy how much liquidity do you have? Like $1 million, $2 million, if you're good, right? So that kind of like restricts you to a particular type of business.
Correct.
So a smaller type of business, right? So for that small type business, very different from GenCap where we do slightly medium size, you would see a lot of the problems that I just mentioned amplified. Specifically about bookkeeping, right? So when the businesses are a lot smaller, I would gander that a lot of the investments from the original founder would not be in actually governance, but actually to run the business itself. It means then the books are kept as what I need to tell the authorities, i.e. just enough.
Yeah, I know what I mean.
Right? And then if it's just enough, then sometimes really, hey, if you need to go deep into the trenches on finding patterns, very hard to find.
Yeah.
Very, very hard to find, right? So I think that's one. Number two, then you get all sorts of different businesses being marketed to brokers. And then at the same time, if you want to look at it from a rewards perspective, nobody is the middle layer is not really fully incentivized.
Correct.
To actually help them, because from a broker's perspective, if I may, it's a percentage of the purchase price, right?
Correct.
Doesn't make sense anybody focuses on the smaller ones, because the effort, I think, was about the same.
Yeah.
You do a small one, a big one, a medium one, small, about the same. So why focus on that one? So a lot of the small businesses are left kind of like hanging on its own. Marketed on its own. So really, to find that gem of a business to buy, really small business to buy, you really need to be super lucky or be very, very diligent in doing your deals.
So back to ETA community, entrepreneurship through acquisition, community in Singapore.
Yeah. So a couple of things I think can be done. I think the first one is education.
Sure.
Right. So the concept on itself is not very pervasive yet today. So I think what we've done is actually the first seed, the boot camp, right? Like we've got really good responses from there on actually trying to actually educate really highly entrepreneurial individuals actually to find various ways to actually achieve their dreams. Right? So what is commonplace and known today is you go and start a startup, go and start a business. And I think it's not neither one or the other is better. It's just very different. With starting a startup, obviously you can look at more innovative stuff. You control everything from get-go. You chart your own path, right? From a entrepreneurship through acquisition is instead of doing the 0 to 1 where you don't have product market fit yet, you leverage on product market fit that has already been attained. You leverage on free cash flow that has been attained. You continue the business, and then where it really makes sense is when you grow it, either through diversification of revenues, opening up new markets, or even through inorganic growth. You start acquiring other businesses like you, either complementary or sorry.
Yeah. So back to this itself, for people who want to pursue ETA, and people who want to start their own business.
Yes.
Is there a difference between their personality, character attributes, sort of things?
Oof. Let me think. I would think it's about the same. For ETA, I think as I mentioned earlier, the characteristics of somebody coming into ETA needs to be a bit more experienced and mature, because you're taking over something, so immediately you have to get your hands dirty, right? So I think from a experimental phase, you don't have much room for the first 6 months or so. It's really about just transition, right? And then after that, obviously, when you understand the business better, you can do a little bit more funky and creative things. As opposed to starting something from the beginning, you are taking on the whole risk profile yourself. So if you want to start early, like really out of like grad school or something like that, you can, right? Because one, it's likely your own money first before you start raising up, etc. So you chart that future for yourself, right? So maybe I think those two are the just key differences for now.
Got it.
Yeah.
Got it.
Yeah.
So in terms of risk wise, do you consider ETA to be of less risk compared to own startup?
Yeah, for sure. So it's working for someone, working for ETA, and then startups, like from a risk reward perspective. So from working for a startup, I think you're really risking everything.
Yeah.
You're really risking everything, right? So you're creating a product that is supposed to solve a problem, but oftentimes than not, you're actually creating a product that doesn't really fit the problem itself, and then you're trying to force fit the solution into the problem, right? This is the classic problem, product market fit thing, right? And it takes a lot of iterations, means time, and not just time, just money as well. And what you need to do is then you have to hire people to help you with the different aspects of it. It's a very costly exercise. Yeah. So I think where ETA comes in is you skip that altogether. You definitely skip that altogether. Yeah, but then you lose the kind of like, if you're addicted to chaos and whatnot, then ETA is less chaotic.
Makes sense.
Yeah.
But ETA, you need to come up with a significant amount to begin with, right?
So yes and no, depends on, again, the model of ETA itself. ETA itself has multiple models.
Correct.
Traditional search funds typically raise $500,000, not from yourself, but from a pool of investors. That $500,000 will give you 2 years for you to search a asset, and then after that you raise your net pot of investments to buy. Right, so that's one. Then the other model in the other side would be self-funded, as you put it. I put out the whole acquisition chunks from my own money, where GenCap is advocating somewhere in between. Right, so you put up a bit, like anywhere between 2%, 5% of the acquisition capital, and then the rest will raise together with you through our investor pool, through debt, as well as through earnout. Yes.
Okay.
Yeah.
Okay.
Yeah.
So back to which, right?
Yep.
Given that most of the searchers are based on what I see, relatively inexperienced in entrepreneurship, they have been like mainly white collar worker, right?
Yes.
What makes you think that this group of individuals can be experienced in the mid to long term? After they buy the business,
After they buy the business, I don't know. I wish them all the best, obviously, and we have very good friends in the search fund community, right? So, but that's where I think GenCap plays a very, very critical role. So again, coming back to the whole concept itself, we should double down on what you're good at, and if you're really good at kind of like deal making, be that. If really good at operating, be that as well, right? So, but together, I think that forms a really powerful unit for us to actually find a good deal and continue to operate and even grow the business. So that's how we look at it. Yeah.
Got it.
Yeah.
Got it. So okay, so you have a pretty successful career for the last 13, 14 years. What is the secret sauce behind your career success?
Wow. So a lot of it is being comfortable with failure.
Okay.
Right. So I've always been startup space, right? So there's really the 0 to 1. You fail, you always fail.
Okay.
Right. So every time when you're at C level, the founder level, you're raising funds, and it's not every day that a VC say, okay, I'm gonna continue the journey with you. I'm gonna write you a check. I think we spoke to hundreds of VCs, majority of them said no. And how do you actually, from one no to another no, going to a back-to-back meeting, continue to keep your head high up and pretend as if, or rather not make the rejection in the past meeting affect you on your performance on the next, because it's very dependent on one another. So having that ability to be persistent is very important. So within that itself also, I think being very self-reflective on what I'm good at, what I'm not good at, and try to double down those things that you're good at, and then for the things that you're not good at, either you improve or find a partner to help you out with. I think those things, having the humility to say I'm not good enough at that, is super important. Yeah.
Got it. Yeah. So back to this, how many people that you have come across possess these traits? Like the following traits, like, comfortable with failure, emotional resilient, maybe introspective.
Yes.
And to be very self-aware, right? Yeah. That what they are great at and what they are probably not. So how many people, percentage-wise, right?
Wow, percentage-wise, a bit hard to say, but I would definitely get that actually there's actually quite a number of people. The challenging thing is actually surfacing them, because most of these people are actually quite humble.
And yes, humility. Yeah.
Very humble, right? So you don't see them playing their whole bragging game, etc. So they are, maybe, again, I'm very stereotyping here, but they're not the high profile ones.
Yeah.
But at the heartbeat, I'm going to hire them, or I'm going to make them my co-founders or partners. No problem, right? So a lot of these people, obviously coming from my background, I know them from the startup community. People who have gotten modest gains, or some have even outright failed. But again, just looking back at the whole journey and success story, what can they do differently? Very little. So a lot of it is really timing and luck, right? So those are the individuals that actually I'm engaging right now, and actually trying to bring them on board as potential operators.
Got it. Yeah. Are they active on LinkedIn?
Yeah.
They are LinkedIn. They are active on LinkedIn.
Yeah.
I was about to say, hey, don't look at those that.
No. I don't think it's kind of like a binary or yes or no kind of thing, right? So LinkedIn, for whatever you critique or I critique it to be, I think it's still a very important tool because it provides that visibility, right? So like GenCap, we provide almost weekly updates as well. Just to keep not just our stakeholders but the wider community understanding what we're trying to do.
Great. Okay, so the pro tip: post on LinkedIn frequently. Okay.
Yeah, at least once a week, at least, I think. Yeah.
So okay. Is there any particular traits of an individual who is more suited for an ETA journey?
Okay, so it comes back to the same traits as a entrepreneur himself. Like being able to be more adapted to risk. I think that's very, very important. So again, just coming back and qualify that problem statement, right? Even though it's kind of like a middle profile in terms of risk, there is still some risk involved. So you are using somebody's money to buy a company of which you are responsible to make it work, right? So there is some risk. The other risk is also from an opportunity cost perspective. You are not going to spend 1 year, but you're going to spend at least 4 or 5 years in the journey. That means it's also, when you come on board as an ETA, you're probably at your peak of your career lifespan, right? So if not this, you might want to be thriving in a MNC instead. Maybe that's more suitable for you, right? That doesn't really make a difference. So be very aware that, hey, this is something that I want to give up. Right, so I think that's the thing. And then I think just before we actually turn the recording on, I think you mentioned a really good point. In terms of ETA as well, not just on a search perspective, but running perspective, there are a lot of things that cannot be predicted.
Yes.
Cannot be prepared for, because you just can't, right?
Yeah.
Like sellers suddenly say, hey, I actually want to continue. Like that's as the example that is given. Or Trump say, okay, 10% tariff.
Yeah.
Especially if your business is very reliant on selling to the US, what do you want to do, right? So for that kind of personality and profile, you need to be really quick on your feet not impulsive, that's not what I'm trying to get at, but be able to change your strategy, be clear about it, and be able to communicate it to your stakeholders. I think that's super, super critical.
Yeah. That having the ability to communicate this directly, yes. Right? I think this is very important.
Yeah, absolutely. Yeah.
So based on what you see in terms of GenCap, right? How many business do you anticipate GenCap will be like acquiring over the next 12 months?
12 months, maybe like 3 to 4 more. 3 to 4.
3 to 4 more, right?
Yeah. But 3 to 4 more, yeah, not too many.
So back to your career journey.
Yeah.
Do you have any regrets?
Regrets, maybe not stumbling onto this model sooner.
That's interesting.
Yeah, because I think if I would have started a couple of years earlier, it would be great too.
Possible,
right?
Possible.
I don't think much have changed over the past 2-3 years. There are some success cases in search funds. Scott is one of them. He's very much lauded in media, I think, as the most successful search funder in Singapore. So it means like there was already some potential possibility over there. So yeah, if we have started a couple of years earlier, maybe. Yeah.
Okay. Yeah. Is there anyone who inspired you?
Specifically for individuals, not really. But I want to look at the unsung heroes.
Unsung heroes.
A lot of the operators that I mentioned to you in the past, right? The SME owners, the startup CEOs, the operating directors, etc. They've done a lot of great work, but it's not in their DNA characteristic to shout out about it.
Or do you think? Or I mean, no doubt, right? I'm sure there are a lot that are very humble.
Yes.
But do you think it could be because of the characteristics of our society, right? You know, our society don't really favor people who are open and vocal. But our society kind of as long as you don't make too much noise, you're good, right? If you make too much noise, you never know what's going to happen.
Yeah. No. I hear you. Like we are not very comfortable. Even myself, maybe I'm guilty of that. To shout out the accomplishments, but I think for your close circle of network, you probably know and aware of what this person has done or not done. And for those people, then I always hold them in high regards.
Okay. Do you have a favorite book?
Yeah. So right now it's actually flavor of time. What's this? Main Street Millionaire, I think, by Cody Sanchez.
There's the very famous American lady, right?
Yes.
She's very active on LinkedIn and social media, right?
Yes. So I think that book in itself is very timely, right?
Yeah.
In terms of the conversation that we're having today. What's happening in the market, and we are seeing that it's actually not just in Singapore, Southeast Asia. US obviously has started this whole entrepreneurship through acquisition many years before we do. Europe, Australia, Japan as well. So I think that flavor of the current times, Cody Sanchez's book is amazing. There are obviously the really good favorites, the good to great, the Principles by Ray Dalio, the typical ones. Yeah.
Okay. Yeah. So where do you see yourself in 10 years time?
Okay, so what I and my partner Zach hope to envision is we build a really good portfolio of SME companies. Hopefully in 10 years time we have 50.
Nice.
So like a couple every year, like 3-4 every year, 5 every year kind of thing. So at that time, hoping that we have 50 independent businesses that is thriving in its own right, and hopefully that we allow investors to systematically invest throughout these 50 companies directly through GenCap. Right. So you invest in GenCap, you have a small stake in every single one of them, and then that kind of like de-risk from a market cycle perspective.
Okay. So this is for the benefit of the potential investors, right?
Yes, thank you.
What kind of returns can they expect from partnering or investing in GenCap?
Yeah, so we've always modeled very close to what the PE returns is, about 25% to 30% net IRR. Today, obviously, it's still early days. It's for us, for Zach and myself, to prove that this model is doable from an investment perspective. I think there are two proof points here, very critical proof points here. One, which I think we've about to hit, already hit maybe, is the ability to acquire great businesses. Right? Great businesses at great valuation and at a good starting stage. That's the first proof point. The second, that's the entry point, right? Then the next one would be really on the ability to grow it.
That's true.
The ability to grow it. So, and grow it not just one, but consistently across our portfolio.
That's true.
Right? So,
yeah, I mean, acquisition is the first part of it. The operating is the second test, right?
Correct. And then the last, sorry, there might be a third, but I would mark it as optional, would be the exit.
Yes.
Right? The exit. So to us, I think there are generally two paths. There are more, but I'm going to just bucket it into two paths. One, we want to appreciate the enduringness, if there's such a word, of such businesses by creating this as a long haul play. Right? For investors to put in and then continue from a dividends perspective to reap rewards as the business grows. You should grow as well. And at the same time, we are not ruling out any potential exits. And these are, once you've grown to a certain level, maybe then there are conversations with private equity or even a larger company that sees that, hey, there's synergies in it, let's have acquisition talk. So probably by year 4, year 5, we'll start entertaining such things, but we are not kind of like forced, because we're not fun. We're not forced within a timeline to say, okay, I need to exit within this milestone. Yeah.
Sounds exciting, huh?
Thank you.
You're chartering a new path in a relatively new territory, right?
Yes.
Okay. Yes. Great. So Eric, thank you so much for your sharing.
Thank you too, mate.
I think you have shed a lot of lights about the ETA, about the search funds, buying of business, and potentially even selling of business in due time, right?
Yes.
I'm sure this is something. And for any audience, if you have any questions that you'd like to find out more from Eric, please feel free to reach out to him directly. I will leave his contact on the YouTube, the comment box over there. So please reach out to him directly. So Eric, once again, thank you for your time.
Thank you so much.
Thank you for taking this time to watch this YouTube channel. And if you like what we just shared, kindly subscribe and like this video. Thank you so much and take care. Bye bye.
Yes. Bye.